Hey, Dennis Tubbergen here. Welcome to another market video analysis. Today is Friday, February the 23rd, an options expiration date. I want to talk to you today about a couple ways to analyze the prospects for the stock market moving ahead. I have on the screen in front of you a daily price chart, and again, I'm using my favorite Japanese candlestick charts. So every bar on that price chart represents 1 day of price action, with the green bars representing days that the market goes up, the red bars representing days the market goes down, and I've also got a volume indicator across the bottom of the chart. Now, this chart starts in 2017 on the left-hand side of the chart and goes through today. In fact, you can see as I'm recording this, the market is open and it started a little bit up today. However, what we really want to look at here is from the peak before the market experienced this big decline of late. Just taking a look at the downside volume, you see that at this peak there was significant selling volume here, and there's significant buying volume. So a lot of activity here at this point of what we might call is a point of price support. In fact, if I were to draw a trend line here across the bottom about here, you could see that's not exactly right, but you see that there's a fair amount of support right in that area. So on the S&P 500 here, that 2550 or so is going to be a really key area moving ahead. Now, if you take a look at the up buying volume, notice how the volume has waned. It's fallen off moving ahead. That likely means that we may be looking at the potential for more downside. In fact, if you look at Elliott wave, this is really setting itself up for a wave 1 decline and a wave 2 advance, and now we may be looking at a wave 3 down, which could be a significant wave down. I talked to you a few days ago about the Fibonacci retracement levels, and Fibonacci was a 12th century Italian mathematician. If you take a look, we're right at that 61.8% Fibonacci turn point. So we think that unless markets can rally here back above this significantly with good volume among this next turning point, that we believe that the trend favors more downside here. Now, if I take a look at a weekly chart, so same Japanese candlestick chart, but now I have a weekly chart here. So again, every bar on the chart represents 1 week of price action. I'm going all the way back to the market bottom after the financial crisis. So I'm going back really about 9 years. Notice that prices have been contained in this price channel that I've drawn on the chart here during that time frame. And it certainly got an upward trajectory. And then if we take a look here at the very top, you see that prices burst out of that channel and now are back down near the top. When you study Elliott wave calls this a throw-over finish, and often it's an exhaustion move. If you go back and look at a chart as to what the Dow Jones Industrial Average did in 1929, you saw a similar pattern all through the 20s, and that throw-over completion or exhaustion move at the end. So this becomes even clearer when you look at a monthly chart. Here I've drawn a monthly chart, again from the market bottom. You see all prices have been contained within that price channel with approximately parallel lines. We again have this throw-over. So we think that caution here certainly makes some sense when you look at fundamentally where stocks are. Cressmont Research has a smooth averaged price PE average, PE ratio I should say. That number now over the last 10 years is smoothed to about 33, which is about twice as high as really it should be historically in my view. So I think potential here is for more downside. I think the market's setting itself up technically for more downside. I'd suggest you guys think about using trailing sell stops on any equity positions that you have. That's today's market video analysis. Hope you guys have a great weekend.